Okay.
I'm by name Tagma Michael Msu, also known as Chartered, your accounting tutor. In today's video, I'm going to introduce you to what is called Introduction to Accounting. And the topic is double entry system of bookkeeping. Double entry system of bookkeeping. Double entry system of bookkeeping is based on two principles. And double entry system of bookkeeping was introduced by Luca Pacioli. And let's look at it. In the two principles, the basic principle, the fundamental principle is debit the receiver account and credit the giver account. While the supporting principle is any debit entry must have a corresponding credit word entry and vice versa. Then let's take this transaction of a business that is just starting to be able to use the principle and post into the ledger. And when we talk of double entry, which simply means we are going to post transaction into the ledger account. What is a ledger? A ledger is a T-shaped account used in posting transaction of business permanently. And that account have debit side and credit side. That's the receiver side and the giver side. And then look at how we can post this transaction of a business that's beginning into the ledger account. Let's look at it quickly. We now say on the 1st of April 2026, started business with cash of 50,000, bank balance of 40,000, and furniture worth 5,000. How can we record this transaction using the ledger and the principle here? Now let's start straightforward. We now say that when we start business, the way started business here means capital. What do you mean? If we start business, we must have capital to introduce the business. And then started business here become the giver account. Started, as I said, started business here means capital. You must have capital before you start any business. Then we now say started business is capital, and capital is a giver account. That is, the owner is giving capital into the business, what is referred to as business entity concept, where the business is different from the owner. That is, the owner is giving capital to the business so that the business will begin or commence. Now, the business is giving capital in form of what? Because that capital must be in form of something. Then the capital is in form of cash, it's in form of bank, and it's in form of furniture. Therefore, the receiver account become cash, become bank, and become furniture. Means the business is receiving cash, and cash become the receiver account. Now, what did I say? The receiver account is what we receive. What the giver account is what we give. The owner gives the capital, then the capital becomes the giver account. And the business is receiving cash, and then cash becomes the receiver account. The business is receiving money in the bank balance, which become the receiver account. And the business is also receiving furniture, then furniture become the receiver account. So in this case, cash will be debited, bank will be debited at the receiver account, and furniture will also be debited as the receiver account. But the giver account we are saying is capital. Capital, let's go to the capital account. Capital account, as you can see, on the faithful date, 1st of April, capital is giving cash into the business. And capital, that's the owner is giving capital in form of cash into the business worth 50,000. The owner is also giving capital in form of bank balance 40,000 into the business. And the owner is also giving furniture. Furniture is physical, but the value of the furniture that was given to start the business is 5,000. Then in this case, you can see capital has been credited as a giver account, because we say debit the receiver account and credit the giver account. The giver account being capital is being credited in form of cash, in form of bank, in form of furniture. Then let's look at the receiver account. The receiver account here is a cash account. Cash account becomes the receiver account. As you can see, cash is receiving, the business is receiving cash by way of capital because the business is starting. And then in this account too, the business is receiving money in the bank, the bank balance, which is capital. And thirdly, the business is receiving furniture, which is a physical asset into the business, which value at 5,000, which is also the capital. Then in this case, you can now understand with me that this becomes double entry. Because in accounting, this from here to here, this is what is called entry 1. And then what is recorded here becomes entry 2. That is double. And this one is also entry 1. And this one becomes entry 2. This is entry 3. And this also become entry, this is 1, and this is also 2. Then this is double entry. Entry 1, entry 2 is double. Entry 1, entry 2 is double, entry 1, entry 2 is double. And we have recorded in the giver account and in the respective receiver account. Let's quickly look at this is a situation whereby the business is starting or commencing. Let's quickly look at where the business is not starting new, but the business is already in existence. Then it means the business will have balances that were there in the previous month, which was brought forward in another month or another year as the case may be. Let's look at this. We are 1st of April, but here they are saying the following balances were in the books of account. Then in this case, it means that the business in the month of March, that is going concern. Going concern because the business closes in March, which means it will begin in April. That means as the business begin in April, the balances that were taken from or brought forward from March to April was cash 10,000, bank balance 20,000, and furniture valued at 4,000. In this case, you cannot call these balances capital in the sense that they are capital in the real sense of it. But all we know that they are referred as balances brought forward, and the business is not starting new. So in this case, if you want to post the balances in the ledger account, you quickly come and say, in the cash account, cash has a balance brought forward of 10,000. Cash has a balance brought forward of 10,000. Bank have a balance brought forward of 20,000. All will be the debit side because all assets brought forward are debited. Cash is an asset brought forward to be debited. Bank is an asset brought forward to be debited. Furniture also is an asset brought forward to be debited. Then all we need is that this was the available money that was in the business at that point in time. Then this formed the capital. Then in double entry, you now have to sum 10,000, 20,000, 4,000, give you 34,000, which become the capital that was brought forward. This is the available money that was in the business that was brought forward in April. So if you are to record this type of transaction into the ledger account, all these balances will serve as brought forward, while the total will be referred to as capital. Thank you all. Watch me in the next video.